We're getting one more sign that efforts to control inflation are working. For the first time in more than a year, the Federal Reserve met and decided not to raise interest rates yesterday, although the Fed chairman made it clear that future rate hikes are still likely. So let's bring in CBS News business analyst Jill Schlesinger, a.k.a. Dollar Jill, y'all. So let's get right into it. Why did the Federal Reserve pause raising interest rates?
You know, we just got a CPI, Consumer Price Index report out, and it did show a lot of progress on inflation. So if you remember, inflation peaked last June at a 9.1% rate, and now we learned we're at 4%. Now, that's still 2 times what the Fed really wants,
right.
But I think the Fed said, look, after 15 months, 10 consecutive rate hikes, time to pause and see how higher rates are impacting the rest of the economy. So they said, we're going to chill out this time.
Okay, how long would this pause possibly be?
I mean, we have to look at this and be realistic. The next meeting is in the end of July, so that's a live meeting. We could see another rate increase at that time.
Okay.
Maybe they wait till the end. There's 4 more meetings by the end of the year. The Fed projects that we could see 2 more rate hikes before the end of the year.
Okay, as soon as the announcement happened, market tumbled a little bit, little panic for some.
Yeah.
Why?
Well, you know, I just said the Fed projected that there could be another 0.5 percentage point increase by the end of the year. Markets had thought, or investors had thought, it would just be 1. They thought, oh, there'll be a 0.25 percentage point before the end of the year. It was 2. They panicked. Can I just be clear about something? The Fed makes these projections. They're not always right.
You go.
You know, they are human beings. There's a ton of different people working on this. They have all the information, but this is an economy that has defied expectations.
There's human error involved.
Absolutely.
Right. All right, so the Fed has been raising interest rates to fight inflation. Have they been successful, in your opinion?
Well, I think that they've been successful in that we have seen it go from 9.1 to 4%. But to be clear, there is still work to do. Prices are still high, especially on the service side of the economy.
Right about that.
Right? Eggs can come down in price pretty quickly. Gas can come down. But when you go get a haircut or you go hire your CPA, their prices are not coming down.
All right, so real quick, the Fed has been raising these interest rates aggressively, but there's a fear that the raise could turn into a dip into recession. Do you think that's a possibility?
It's always a possibility. I want to be clear. There is no recession right now at all. So for everyone sitting at home, rate hikes are still in play. You need to be very careful about managing your debt, pay down that credit card debt, put that money in high interest savings, be careful, prepare for the worst, and hope for the best.
All right, we were talking during a commercial break that you're headed to the spa. Well deserved. You're one of the hardest working people I know. Jill Schlesinger, we appreciate you.